Welcome to the Business Standard Banking Show. Public sector lender Indian Bank announced its Q3 numbers recently. Its net profit doubled to 12 to 25 crore. Its asset quality improved, and there was adequate provisioning that helped net NPA to dip to 1%. We today have the bank's MD and CEO, Shantilal Jain, to talk about the bank's performance. Mr. Jain, welcome to the show.
Thank you.
But let me first ask you the issue which is dominating the headlines these days. It's about the Adani Group and the bank's exposure to the group. Sir, what is Indian Bank's exposure to the Adani Group?
So account-specific discussions generally we do not do, sir.
Okay, no, since some of the banks have said that, like PNB has 7,000, SBI has 21,000. So I just trying to understand, is a substantial amount which is there or?
Not substantial amount, but account-specific discussion we do not do.
Are you worried in any case or things are still okay?
Things are okay, sir. Absolutely no issue with us.
Now come the numbers. Coming to the Q3 numbers, the loan growth as on December 31st was slightly below the industry growth trend. What could be the reason? Are you kind of cautious on business growth?
Well, if you see our growth, our RAM growth is 12%, right? And YOY we have grown 13%. Under RAM, the retail we are growing 15%, but all components of retails are growing between 12% to 25-27%. Likewise, in agri, all components are growing. MSME, all components are growing. In a corporate, our growth is less, 7%, because of the interest rates. We continue to remain selective and choosy for corporate accounts based on the margin available in the account. If the interest rate suits us, the margin suits us, we are going ahead. Otherwise, we will be continuing growing in RAM. And you see continuously from last 5 quarters, 6 quarters, 7 quarters, you see bank is growing in RAM 12 to 14% continuously. And that is our strength. And our RAM is 62%, highest, one of the highest in the industry. And that is shows our stable balance sheet and stable profitability of the organization.
So RAM advances are 62% of the loan book and the rest is corporate. Do you want to maintain this ratio or do you think the ratio will change going forward?
We would like to maintain this ratio because we are continuously growing 12 to 15% in the RAM segment.
Right.
Maybe 1% here and there, but nothing material will change.
What is your growth projection for the current financial year, credit growth projection?
We will continue to grow with around 13-14% as we were growing all along.
And what is the growth strategy for the next years?
Our growth strategy is basically in retail, we are growing. In agri, we are growing in all segments of the agri, whether it is a crop loan or a gold loan or a SHG loan or an investment credit. Likewise, in retail, whether home loan, auto loan, education loan, personal loan, jewel loan, all these are growing and will continue to grow in that speed. In corporate also, wherever we are having good margin, we will be growing that also. And we are having good liquidities and therefore we can grow.
Right. So next financial year also you are looking for a similar growth, 13-14%?
Same way we would like to grow.
Now coming to the deposit side, the CASA growth was a single digit. CASA is also very important for the margins. I will come to margin in a bit. What are the plans to improve your CASA growth?
We are, as far as the domestic side is concerned, we are maintaining 41% CASA. Of course, after considering international and we are at 40.4%, right? Bank as a whole. And basically what happens, the interest rates have increased the market. So people who were having deposit in a say saving account and partly move to a term deposit and other. Second, what happens in the third quarter, generally what happens is the festive seasons and all, people will incur more expenditure is against keeping in the account. Now what we are doing is now we have started a war room in our corporate office and various relationship at our Lucknow or a Calcutta or a Chandigarh or a various places where for government relationship we have created a separate vertical. We have created a teams for growth in deposits. You must be reading in papers and all, sometimes in the morning, sometimes in the evening. We have started opening account through tablets. Last month, around 57% of the accounts were opened through the tablet. The purpose of opening account through tablet is that you can go to the institutions, organizations account, because not many persons are coming to the bank for opening the accounts. So by going to their places, you can open a salary account. We open a salary account of organizations. If you go to the family, open a salary account of a saving account of the families and all. So in the last 9 months, we have opened around 27, 28 lakhs new accounts. So we are focusing on deposit growth first. Second is that you see last year my deposit growth was 10% last year.
Right.
So last year in terms of amount, our growth in deposit was 56,000 crore. Whereas the growth in advance around 26, 27,000 crores. So excess liquidity we were carrying in the last year, right? So that liquidity, if we are this year, what happens, just opposite. So this liquidity we have deployed for credit. So now going forward, we will be totally working on that increase in the deposit base.
Now you will work to increase the deposit base. So staying on the deposit growth part, the peak deposit for Indian Bank is 7% for 555 days. Now in the union budget, the government came up with a scheme for Roman depositors offering 7.5%. Keeping that in mind, do you think there is scope for you to offer more on the deposit side?
Yeah, actually deposit interest rates are decided based on the liquidity available
Right.
and the credit growth available to you. Suppose I need money for my credit growth and I'm making margins, naturally I will increase my deposit rates. This is a function of the asset and liabilities, ALM. So you are rightly said that 7.5% has the FF has declared, right? That is for a two years deposit, and banks generally take deposit 1 year. General deposit are 1 to 1.5 years. So I think my present rates are competitive and one of the best in the present rate. But if the situation so arise that we need to raise a deposit rate, we'll raise deposit rate. But for meeting my credit needs.
So coming to the margins now, since liquidity is also getting tighter with RBI is increasing interest rates and deposit rates could inch up. Do you think you can hold on to the margins which was extremely good, healthy in the third quarter?
Yeah, you see our margins, first quarter 3.1, second quarter 3.2, third quarter 3.74. The reason for increase in margins are two, three basically. One is when we are in increasing interest scenario, naturally your asset get repriced. So the repo link advances get repriced, whereas the deposit get repriced with a lag,
Right, right,
right? And so the margins which presently 3.74, slowly what will happen, our deposit cost will also increasing, right? So on an average, we were 2.91 the last year. And presently, on average, you say around 3.35 for 9 months or so. I am of the hope that we'll be able to maintain our margin for 9 months as a whole. Because slowly what will happen, the deposit cost increase will also come.
And what is the percentage of advances which is linked to the repo rate?
Around 56% are linked to the MCLR, and around 36-37% are to the repo rate. So what happens, this MCLR will also come for repricing for a period, and when it will come for repricing, naturally your income will increase, and simultaneously your deposit will also come for repricing.
Correct.
So maybe some gaps. That is why I've given you a lower number of margins, but our endeavor will be to protect that.
Coming to asset quality, significant improvement in asset quality was made with net NPA hitting 1%. PCR is almost 85%. The street expects the further improvement in the NPAs because recovery from lumpy accounts like Stray and INFS. What is your take on this? When do you think some more recovery could happen?
You see our recovery of this December quarter or a June quarter or a 9 months. December our slippage was total 1,300, right? Recovery was 2,600. So recovery was higher than the slippage, right? Higher than
More
the
than
slippage.
double.
Double. It is double. If you see year as a whole, our recovery was 6,500 crore in 9 months. and the slippage of 5,300. Here in 9 months also we are higher than. So when your recovery is higher than slippage, naturally two benefits you will get. First, your asset quality improves. At the same time, your provisioning burden will come down further for the P&L account. So based on the recovery trend which we are having, and you see at the beginning of the year we said that we will recover 8,000 crore, 2,000 per quarter. So in a 9 month we have recovered as against 6,000, 6,500. So 110% of the target which we achieved, and we hope that this quarter also we will be able to recover 2,000 crores, and slippage will be naturally.
This quarter we will be able to recover.
We hope that this quarter also the recovery will be better than the slippage. This is an ongoing process of around 25,000 crore of a book where is in NCLT, right? So the resolutions takes place time to time and we are getting money. And you see as the provisioning part, our provision coverage ratio is 93.5 and 94%. So the recovery, whatever the recovery is coming to my P&L.
Do you have a time frame in mind by which you think the SREI accounts recovery could be possible?
I think in SREI account 9th or 10th February is the date for bidding and all, right? After that, so maybe this quarter or next quarter we should be able to get. Maybe the next quarter also, because the entire process will take its own time, NCLT approval and all other approvals. So maybe in the next financial year we'll be able to get. So, but we are fully provided to this account. So whatever the recovery will be again to the bank.
And finally, sir, have you identified NPAs which you plan to sell to NARCL?
NARCL identified 20 accounts of us. Of course, they are resolving around 43 accounts, of which 20 pertains to us, having a balance of 5,200 crores. Out of these 20 accounts, 8 accounts bid have been received, which is in the process of getting Swiss challenge and getting a better price, right? In 8 accounts, they will submit the bid very soon. Completed due diligence. Remaining accounts, due diligence is in process.
So do you expect some recovery from NARCL in the current quarter, or that will spill into the next quarter?
Some recovery can come in current or in the next quarter.
Some recovery.
Because it's a process, it is a process for.
So where do you see your net NPA and gross NPA numbers, say 12 months down the line?
My number should come down further, sir. The way you see from last 6, 7, 8 quarter, continuously we are coming down. And net NPA, which was 1.5 in September quarter, is now 1%.
Right.
So now I'm having only net NPA of 4,000 crores. Right.
Right.
And every quarter I'm earning 4,000 crore of operating profit.
Mrs. Jain, thank you so much for speaking to us. It was a pleasure talking to you.
Thank you, sir. Thank you so much for having interest in the bank and kindly keep supporting us.
Thank you. Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.